Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and I'm so glad you're with me today because today we're going to be talking about some pretty basic stuff, actually. Home maintenance and safety. And of course, how a reverse mortgage can help you with those expenses. After all, you are listening to Reverse Mortgage Radio, right? It wouldn't be much of a reverse mortgage radio show if I just gave you good, helpful information about home maintenance and home safety without pitching my product. That's the deal that you get when you join this radio station. So thank you very much for joining me today. I am your host, Bruce Simmons. If you have any questions at all about reverse mortgages as you're listening to the show, please feel free to give me a call. My number is 303-467-7821. 303-467-7821. You can also visit me online at reversemortgageradio.net. Reversemortgageradio.net is my website. On there, you can download my free consumer guide. You can also get a free quote on the show. You can even input an application, a full application on there, almost full. I don't ask for your social security number. But if you wanted to get a good quote, you can plug in some basic information on there. See how much money is available to you. With reverse mortgages, you do have to pay off any existing loans that you have on your home. This is kind of a point of confusion for people, and I'm kind of jumping ahead here or off the topic of safety. But with a reverse mortgage, it's a loan that's specifically designed for people that are 62 and over that allows you to convert a portion of the value of your home into money that you can use. However, you have to pay off any existing loan on the home first. If we can loan you $200,000 on a reverse mortgage and you owe $150,000 on your existing mortgage, we have to take the first $150,000 out of the $200,000 that we're going to loan you and pay off that existing mortgage, which is great because it eliminates the principal and interest portion of that payment. If your principal and interest portion is $850, then you're automatically saving that money. You're keeping that money in your pocket because with a reverse mortgage, no payment is ever required as long as you do these 5 things that I'm going to tell you right now. You have to live in the home as your primary residence. You have to pay your property taxes, pay your homeowner's insurance. You have to maintain the home, and you have to keep your name on title to the home. As long as you do those 5 things, no mortgage payments are required on the reverse mortgage. You can make payments if you want, but they're not required. However, and this is the catch, you're still charged interest every month. And that interest gets added to your loan balance every month. If you have $150,000 on your loan balance, next month, I don't know what it's going to be. It depends on interest rates and all that stuff. But over 10 years, you could end up owing $250,000 or $300,000 on the loan. We just don't know what the interest rate's going to be, or if you're going to use any additional money, if you're going to make payments. All those things are factors that determine how much you end up owing on the loan. But the nice thing is, let's say that you end up owing more on the loan than the home is actually worth at the time that you permanently leave the home. The loan only comes due when you permanently leave the home or you fail to pay your taxes or insurance or what have you. You don't maintain the home or you don't keep your name on title. Any of those happen can cause the loan to come due. At that time, the whole balance comes due. But let's say the value goes down. Now, the odds are the value is going to continue to go up, even though it's slower than it was back 5, 6, 7 years ago. But odds are it's going up. And we don't loan 100% of the value either. If you've got a $500,000 home, we might loan you $175,000 or $200,000 on it, depending upon your age and the interest rates. The older you are, the more money we can loan as a percentage of the value of your home. But so there's a lot of equity remaining in your home. And odds are your home is going to increase in value over time. But let's say it doesn't. Let's say it goes down and you end up owing $400,000 on this reverse mortgage and your house is only worth $350,000, which probably would never happen if it's starting out at $500,000 today. But let's just say that happened. You could continue to live there as long as you choose, as long as you continue to pay the taxes and insurance. You can never, ever, ever be kicked out of the house. But when you permanently leave the home, when the last homeowner permanently leaves the home, that's when the loan comes due. Your heirs inherit the home. Odds are they're going to inherit a lot of equity. But if the value drops and there's no equity left, they're not going to be stuck with a debt. They could just sign the house over to the lender and walk away. Or they could get a loan for 95% of whatever the value is at that time and then just pay that. So if the house is only worth $300,000 and you owe $500,000 on the loan, they go get a new loan for 95% of $300,000 and they can keep the house, and that extra debt gets pushed off onto the lender. Well, technically no, because they have mortgage insurance on the loan and that protects them. So they're not going to lose any money. Because of that, they're never going to come after you, your estate, or your heirs. So you're 100% protected, and your heirs are protected in that respect as well. And that's way off topic from what I was talking about, but I felt it important to kind of explain that real quick. So the way reverse mortgage can benefit you with home maintenance and home repairs, okay? You can draw the money out in a number of different ways from a reverse mortgage. If you have an existing mortgage, that has to be paid off first. If we can only loan you $150,000 and your loan balance is $150,000, we're going to pay off your mortgage. And the only benefit you get, which is a huge benefit, is no mortgage payment. That might save you $800, $1,000, $1,200 a month in principal and interest. Remember, it's still your responsibility to pay your own taxes and insurance on the home. But whatever the principal and interest portion of your mortgage payment is goes away because the mortgage is being paid off. The existing mortgage you have is paid off with a reverse mortgage, and the reverse mortgage does not require a monthly payment. That obligation goes away. You're pocketing that extra money. You're not having to make that monthly payment. So every month you keep an extra $800 or $1,000 or $1,200, whatever it is, in your pocket. You can use that money then for maintenance on your home or for safety issues or what have you. But let's say you own your home free and clear and we can loan you $150,000. Well, you don't have to take all $150,000 up front. You say, hey, I only need like $20,000 to remodel my bathroom or whatever it might be. And you say, that's all I want. Well, that's fine. You take that $20,000 and the other, say $130,000, if we could loan you $150,000, ends up in a line of credit. That line of credit's available as long as you keep the house and as long as you maintain it and you're fulfilling the property obligations of paying the taxes and insurance. That money stays in that line of credit. You use it whenever you need it. There's restrictions on the first 12 months, how much you can take out in the first 12 months of the loan. But after the first 12 months, there's no restrictions. And the line of credit actually grows over time. So if you kept that line of credit and you didn't touch it, say for 10 years because you were keeping it for emergencies, that $130,000 you have might grow to be $250,000 10 years from now. And odds are the $20,000 you took out might be $40,000 is what you owe 10 years from now. I'm just using that. The rule of 72 says basically at 7.2%, your loan balance will double over time, or your investment doubles, or whatever the case may be over 10 years. So that I'm just using that off the top of my head just for simple numbers. But anyways, it provides you a lot of flexibility. And the entire goal of the reverse mortgage is to relieve financial stress. If you're worrying because you don't have the money to maintain your home, and you know it needs to be painted and the wood is on the trim is damaged because it hasn't been painted and it's getting weather beaten and it looks really bad, but also it could become a safety issue if other things start falling off your roof, if your roof is bad or any of that stuff. Because you don't have the money to fix it, that's a stressful situation. And I've done a number of loans for people in that situation where we can give them the money to help fix up the home and make it safer too. Because let's say even just regular maintenance like cleaning out your gutters. If you don't do something like that, and believe me, I did that. I do that every year when I put up the lights, and I'm becoming less and less sure walking around on the roof. And even when I'm up on high on a ladder, scooping out the gutter of all the leaves, even at that time, it's still, I'm not even 60 years old yet. I'm only 59, and I'm unsure when I'm walking around on the roof or up on a ladder. I would rather pay somebody to do that. But at this point, it's kind of a pride thing. I don't want to pay somebody. I could take care of my own darn house, right? But I know at some point I'm going to have to, because if you don't clean out your gutters, then you end up with like ice dams where the snow piles up, and especially on the north side of your house, if you've got one of those pitched roofs and it kind of V's and it piles up there because the leaves fill the gutter, and ice will form there. And eventually, when that ice melts and it doesn't have anywhere to go, it could drip down and cause damage to the soffit and even inside the walls, inside the house, and start dripping in through the roof, all kinds of damage that could be way more costly than paying somebody to come out and clean your gutters. But if you don't have the money now to clean your gutters, how are you going to have the money when this other damage comes about, right? A reverse mortgage can help you with things like that. That's what I want to talk to you today about. So we kind of touched on what a reverse mortgage is and kind of how it works. There's different kinds of reverse mortgages too. The reverse mortgage I focus on most often is what's called the home equity conversion mortgage. It's an FHA insured loan. FHA stands for Federal Housing Administration. So it's a government insured loan. It's not a loan from the government. It's from individual companies, but the government guarantees it. There's certain guarantees that they have for the lender, and there's certain guarantees they have for you, the homeowner. As the homeowner, one of the guarantees kind of benefits the lender and you both. And that's where with the mortgage insurance, if you end up owing more on the house than it's worth, you can continue to stay in the home. You can even still draw money out from the loan if you have money available. It's still available regardless of the value of your home. If you had a traditional home equity line of credit from your bank, that ain't going to happen. You will not be able to draw money out if you owe more on the house than it's worth. Odds are they will never let you get that to that point. Because if you're drawing money from a HELOC and the value of your home drops, let's say, they'll cut out your line of credit just like that. They did it in 2008, and they will do it again if the value were to drop. Now, I don't think the values are going to drop anytime soon, but who knows, right? That cannot happen with a reverse mortgage. That's mortgage insurance. It protects the lender, which indirectly protects you. However, the money that's available to you in that line of credit, or if you're receiving a monthly payment, let's say we're depositing $1,000 every month into your bank, and you're using that money to live a better lifestyle, or giving you the peace of mind so that you could pay the bills and pay the maintenance and do all these extra things. That money can never be closed out. Let's say the lender goes out of business, though. Well, what happens then? FHA guarantees it. That's the benefit of having FHA. That money is going to continue to flow to you or be available to you in that form of a line of credit until FHA can find a new lender. They're going to take it over and they'll make sure that the money gets to you. So keep that in mind. Those are some of the benefits, but there's also non-FHA insured loans. Now, those are loans mainly for more expensive homes because FHA caps the value the maximum value we can use starting in 2025. It's going to be about $1.2 million. So let's say you've got a $2 million home, and you need to access a bigger percentage of the value of your home than FHA will allow. The non-FHA reverse mortgage, called proprietary reverse mortgages, might be beneficial for you. Or let's say you're only 58 years old, but you need the money now to for whatever reason. You can do a non-insured, non-FHA insured loan because they go down to age 55. The other thing is, if you're in a condo that's not FHA approved, if you've been told in the past that you couldn't get a reverse mortgage because your condo is not FHA approved, you possibly could. There's no guarantee. We have to make sure that you meet the lender's qualifications, but you don't have to meet HUD's qualifications or FHA's qualifications. So those are the reasons why you might use a proprietary reverse mortgage. The other kind of reverse mortgage is something called a single purpose loan. Basically, the things like, if you've ever heard of Denver Urban Renewal Association, I think is what it is, or I'm not sure what the A stands for, administration maybe, but DURA, D-U-R-A. Basically, homes in Denver, if they're a certain age, I think, and let's say you need a new furnace because the furnace was from 1963 and it's not working very good, and you're over a certain age and under a certain income, you could qualify for a type of reverse mortgage where basically the city will loan you the money to get this new furnace or to get the new electrical system or whatever the case may be. And then they might charge you 1 or 2% interest, but you're not having to pay it. It's a much, much better deal than, say, even an FHA insured loan, but it's only for certain uses and you have to meet certain qualifications. And there's no line of credit available or no monthly income or monthly payment from it or anything like that. It's just a one-time, one-purpose deal. And then you keep it. And if you keep it, I think, a certain time period, like 15 years or 20 years, then the loan's forgiven, I think. It's been a long time since I've looked at this, and I don't know what changes have happened. But if you're in Denver, that might be the best way for you to go if you know you only make $15,000 a year on Social Security, and you've lived in the home for the last 15 or 20 years, and you're 80 years old. Well, that might be the best way to do it because there's still no payments. There's more red tape, hoops you have to jump through, but I don't know how they work. So you'd have to contact a counselor or somebody in Denver. Anyways, those are the different types of reverse mortgages that are available. So I want to talk about a couple of ways that a reverse mortgage could be used for maintenance, because we mentioned like just cleaning out your gutters. That obviously might cost a couple $100, or maybe you want to get those kind of gutters that never have to be cleaned out. They've got a filter or something on them so that the water doesn't pool up there. That could be a much more expensive thing, but maybe that's a whole lot better for your situation, and you don't have the money to do it. A reverse mortgage can definitely help you out with that. So all these different ways, painting it, having the money to be able to paint your home, or have somebody, let's say you've always loved to garden, you've got this beautiful yard, but now it's getting to the point where it's too hard to maintain, but you really love seeing it. You love being out there, having tea in the afternoon or whatever the case may be. Now, granted, we're in the middle of December, so that's probably not what you're going to be doing. But in the spring, maybe that's what you want to do. You have somebody come and maintain your garden for you in your yard once a week. And maybe that costs you $50, $75, $100 a week to do that. You might be able to do that with a reverse mortgage. If we eliminate your existing mortgage payment and save you $1,000 a month, well, now you could afford to pay somebody to do that for 4 or 5 months out of the year. Or to clear out the snow out of your driveway, to maybe run errands for you, or even have somebody come in and cook or clean for you from time to time. I know one of my customers, he pays to have a guy come in and clean for him once a month, just once a month. He takes care of most of the other stuff, but once a month this person comes in and does a really good cleaning of his house for him. He has somebody buy his groceries for him because he still loves to cook. Even though it's harder for him to get around, he still does his own cooking. So all these different possibilities, ways that a reverse mortgage can benefit you just on a day-to-day basis. But let's talk about safety issues. By the way, too, if you have just tuned in, my name is Bruce Simmons, and you're listening to Reverse Mortgage Radio. And we're talking about ways a reverse mortgage can benefit you, both from a maintenance standpoint and a safety standpoint with your home. And a reverse mortgage allows you access to the equity without having to make a monthly payment on it. You still have to continue to pay your own taxes and insurance and maintain your home, which we're talking about anyway, right? If you can't maintain your home, a reverse mortgage might help you be able to do that. But let's say it's now really getting difficult to get around, and you're not in a home that's really conducive. It might be best to sell. You got to look at that. It's very possible that it might be best for you to sell and move to some form of even assisted living, or maybe downsize to a one-level condo, whatever the case may be. But if you really want to stay in your home, maybe getting a stair lift, where basically one of those little chairs you attach to your stairs, and it'll take you upstairs while you sit there, and you don't have to climb the stairs. Or maybe you need a walk-in tub. Maybe you want to remodel your bathroom, like I said at the beginning, and get one of those sinks that's maybe a little lower, so that if you're in a wheelchair, you can roll right up to it, and it doesn't have the cabinet below it. And you can roll right up to it so you could wash your face without having to try to lean over sideways and cause all kinds of problems with your spine, right? All these different possibilities. The other thing, too, is one thing I remember hearing somebody talk about once is just painting the walls, making sure the walls are a different color than your carpet. If you've got off-white walls and beige carpet, sometimes, especially at night, it's hard to differentiate. If you've got bad eyesight, your glasses are in the kitchen and the lights aren't on. And that's another thing, getting good lighting. That can make all the difference in the world. Get those good can lights in your hallway so you don't have a dim hallway that's going to cause problems, tripping hazards and such. These things are all safety issues which can really benefit you. I remember I did a loan for a couple up in Longmont years ago where they had the home built. It was they asked for all these custom changes. It was part of a chain, the company, like one of these big home builders, but they had the light switches placed low, so if they were in a wheelchair, they could reach the light switches. They had an island, beautiful kitchen, but they had this island, and part of it was normal height and part of it was lower. And there was no cabinet underneath the lower part, so if somebody was in a wheelchair, they could be at the proper height and wheel their wheelchair right up to the counter to be able to cut vegetables or what have you. They had all these thoughts, and it wasn't a ramp, but there were no stairs in the house at all. The sidewalk had a gentle slope up to their doorway, and then there was just a straight entrance into the doorway, no step. Little things like that can make a huge difference. The same thing out of the garage, into the garage, same type of thing. And it was all built in. So they customized handrails. Handrails make a huge difference. In fact, my wife, when we remodeled our bathroom, she got a handrail put in the shower that we have, because it's just a normal upright shower, not a bathtub in there. And she got a handrail put in there just to make it easier for her when she's washing her legs or whatever. So it makes a huge difference having little things like that can just make you feel safe. You want to feel safe in your home, and being able to have those safety factors. Maybe you're in an area that's not as safe as you like as far as the neighborhood, but you're there and you don't want to move because the cost of moving is tremendous these days, obviously, and finding a new home is very, very difficult. Especially if you're on all one level now and you don't want to mess with that. But let's say you're in a neighborhood that's not very safe and you need an alarm. You want to have an alarm there. A reverse mortgage can help cover the cost of that even, and the monthly maintenance of it, whatever alarm system you do. But you want to be aware of some of the downsides with reverse mortgages, I shouldn't say downsides, but considerations. Let's call it considerations. Basically, remember, like I said at the beginning, your loan balance gets larger over time. You want to talk to your family about that. If you want to leave a free and clear home to your estate, a reverse mortgage is not the best way to do it. If you want to be able to save money in actual cash or things of that nature, and you want to use the equity in your home to do that, because you don't have a mortgage payment now, so you're keeping more money in your bank account, a reverse mortgage is great for that. But you're not going to leave the home free and clear. You get the benefits of living like you own your home free and clear, because if you had no mortgage on your home right now, you would continue to pay the taxes. You'd continue to pay the insurance. You'd be living there as your primary residence. You'd be maintaining it too. All those things, nothing changes, right? It's just a reverse mortgage allows you the benefits of living in a free and clear home without the home being free and clear because you still have a mortgage against it. A reverse mortgage is still a mortgage. It's just a much more flexible option than paying off your mortgage and sitting on $500,000 asset that you can't touch. You can touch it with a reverse mortgage. You can access a portion of the value of your home with a reverse mortgage. So keeping that in play. The other thing to factor in too are the upfront costs. And I break all these down for you when we meet. So basically the way it works is you call me, you say, hey, I want to learn about this reverse mortgage because I need to do some upgrades to my home and I need to pay off my mortgage and get $50,000 for these upgrades, however you want to do it. I take some basic information, run numbers, make sure you qualify. I do not check credit. I don't ask for your social security number at that time. I will eventually if you decide to move forward, but only if you decide to move forward. Then I come out and go over all this stuff with you, very detail oriented. And I encourage family to be there with you, or financial advisors, or lawyers, or a friend, just to get another set of eyes on it, to make sure you understand exactly what you're doing, what the costs are, what the long-term costs are as far as the negative amortization. Your loan balance is growing over time. But what will that look like, or what could it look like 10 years down the road or 20 years down the road? You can see that with the estimated amortization schedule that I show you. Now, there's a lot of variables like I talked about. We don't know how much the home's going to appreciate. We don't know what interest rates are going to do. All these things are how you're going to use the line of credit if you set that up. So there's a lot of variables, but it gives you an idea. And you have to be okay with that before proceeding. Then you have to talk to a reverse mortgage counselor before you're allowed to sign any papers. You got to keep all that in mind. These are considerations, but if it's going to allow you to live a more peaceful lifestyle and have peace of mind, that's the goal with reverse mortgages. Like I said, it's to relieve financial stress or alleviate it. To where you never have it. Maybe you don't have financial stress now. You're fine. But you get the reverse mortgage in place now because who knows what it's going to be like 2 years, 5 years, 10 years down the road, right? You might have a medical issue. You could get in a car accident. There's a lot of things, knock on wood. Let's hope none of that stuff ever happens. Let's hope you continue to run 10 miles every day or walk your dog 5 miles a day, however you exercise and stay healthy. But we don't know what the world has in store for us. I know that for sure. So keep that in mind. It's better to have it in place now, and you can have that money available to you if you ever need it. Of course, if you never use it, you're not charged interest on it. Anyways, please feel free to call me with any questions about reverse mortgages. I'd love to talk to you about your specific situation. My number is 303-467-7821. My name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage Incorporated right here in Denver. 303-467-7821 is my direct line. That rings right to me. I have it forwarded to my cell phone. Or visit me online at reversemortgageradio.net. I hope you have a fantastic day. Thanks so much for joining me. We'll talk to you next week.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.